Ever felt like your home is a ticking time bomb? The real estate market, once rock solid, is showing cracks, and Bitcoin might be diffusing the fuse. In the UK, house prices have gone flat in June, slipping from May, and average values now sit about £2,150 below where they were in January, the slowest annual growth since July 2024, with many economists warning recovery could take months or longer. Meanwhile, the US is seeing first-time buyers vanish as mortgage rates remain near 7% and prices keep climbing. More than 46 million households now rent, and only 6 million can afford a median-priced home requiring a $127,000 income. Tenant pain is a global theme too. Across Europe, financial firms and hedge funds buy up homes, hiking rents and displacing families, sparking massive protests in cities like Madrid. Even property flipping in England and Wales has plunged to a 12-year low, with rising fees, taxes and costs cutting into profits. That's the stage, a global real estate system straining under higher costs, fewer buyers, and mounting institutional pressure. This signals deeper macro trouble ahead, slowing sales, rising inventories, and valuations outpacing incomes. In the US, 61% of counties had monthly real estate value declines in April 2025, the widest drop since the 2007 to 2010 crisis. Nationwide, existing home sales fell, and home price gains cooled to just 0.7% year-over-year, the slowest pace since June 2023. And while overall US home values grew only 0.6% in May to a median $440,892, inventories jumped 16%. Australia, too, has seen property prices rising nearly twice as fast as wages, despite supply shortfalls. In England and Wales, slowdown is squeezing flippers. Flipped homes fell to 2.3% of sales in Q1, the lowest since 2013. Everywhere, affordability is eroding. So what happens when real estate cracks? Traditionally, households lose net worth, sell assets, pull back spending, and risk assets like stocks, and yes, crypto, can suffer. But here's the twist: Bitcoin is emerging as an unconventional hedge. Bitcoin is often dubbed digital gold, fixed supply, censorship resistant, no central bank to bail it out. In 2025, that narrative is gaining ground. Institutional investors like MicroStrategy and Asia's Metaplanet are accumulating billions in BTC. Analysts are drawing correlations between inflation trends, fiat dilution, and capital reallocation into crypto markets. As traditional inflation hedges like real estate and gold underperform or are hard to access, Bitcoin stands out. It's not just words, crypto is entering the housing market directly. Mid-market developers and suburban builders are beginning to accept Bitcoin for property deals. Some platforms offer full crypto-backed financing. Tokenized real estate funds are now fractionalizing property ownership via blockchain. That means buyers can invest in rental portfolios using stablecoins. That's radical, democratizing real estate access and sidestepping onerous mortgages and credit barriers. But is it working? Well, correlation between housing stress and Bitcoin inflows is already showing up. When US home prices fell in April, Bitcoin dipped, but quickly recovered. That reflects its liquidity, portability, and appeal as a haven when housing starts to tremble. Still, volatility remains a key caveat. Bitcoin isn't a safe haven the way a rental income or a boarded-up home can be, but as a macro diversifier, in times of real estate weakness, it performs differently than stocks or bonds. The real estate time bomb doesn't mean doom, it's a reset. High rates will likely remain until inflation eases. Housing will decelerate, inventories will broaden, regional slip-ups will become national stories. That crisis leads people to question why they're stuck in asset classes that are illiquid, slow-moving, painful to manage. Bitcoin offers speed, low friction, and access, making it an emerging alternative for wealth storage and inflation hedge. So here's the bottom line: real estate everywhere is struggling with high costs, low affordability, and growing institutional ownership that squeezes out families. That builds a macroeconomic backdrop ripe for asset repricing and capital flight. Bitcoin, scarce, digital, borderless, could absorb part of that flight, serving as a modern hedge. It's not replacing houses. But as real assets buckle, Bitcoin is stepping in as a defensive play for portfolios under pressure. What should viewers do? Keep an eye on housing data, price decelerations, inventory spikes, buyer sentiment, as stress indicators. Watch Bitcoin adoption signals from institutions, real estate platforms accepting crypto, and tokenization platforms going mainstream. Consider positioning a small macro hedge within your portfolio, balance liquidity, volatility, and real estate exposure. Because when real estate tremors ripple out, Bitcoin may become the unsung shock absorber. And that's not speculation, it's macro evolution in progress. Remember to like, subscribe, and share if you want more breakdowns that tie Bitcoin to big global trends. Bitcoin isn't just a chart, it's a new layer in the macro financial system. Don't miss it.